morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at some financial results which are starting to roll in. And today we're looking, of course, at two of the banking giants, the locally grown banking giants. We, of course, we're speaking about Republic Financial Holdings Limited, as well as First Citizens Group Financial Holdings. That's quite a mouthful, but let's just call them First Citizens for the time being. Now, both groups would have reported improved earnings, which would come as welcome news to shareholders and investors, particularly in a very dynamic regional and local environment. Let's take a look at what these both groups would have produced and what investors might expect ahead. Turning firstly to Republic Financial Holdings, or RFHL. For that 9-month period ended June 30th, 2025, the group would have reported an earnings per share figure of $9.19, a 1.8% increase from the $9.03 recorded in that prior comparable period. Now, driving this performance was a very credible improvement in net interest income, which increased just about 7.6% from $3.76 billion to $4.04 billion. Operating income also increased overall 7.9% from $5.234 billion to just about $5.65 billion. Overall operating profits improving that 9.4% from $2.36 billion to $2.58 billion, with net profit attributable to equity holders ultimately improving that 1.6% from $1.48 billion to just about the $1.5 billion mark. So certainly good news, despite a very modest increase in earnings per share, but overall continued positive trajectory in terms of profitability for RFHL. Now, when you take a look at revenue trends, continues to be upward and strong, with that movement again in terms of net interest income up to 7.6% from $3.76 billion to just over $4 billion. Other income as well also increasing just under 9% from $1.47 billion to just about $1.6 billion. Overall, again, that 7.8 to 7.9% increase, which is actually an acceleration from the 4.5% increase in total income that would have taken place in the prior comparable period when compared to the 9 months of 2023. Now, when we take a look at Republic, again, this graph really illustrates the diversification and increasing diversification of Republic's profit before tax contributions and again before eliminations. And we can see that there was some notable changes in terms of Trinidad and Tobago. There was a 25% decline in terms of PBT contribution, again before eliminations, from $2.56 billion to $1.9 billion. However, this was offset by improvements in all of the other jurisdictions, or most of the other jurisdictions across the region. Barbados, for example, increasing in that bluish segment from 192 to 262 million, or roughly 36% increase. Suriname from 64 to 119 million, or roughly an 85% increase. Eastern Caribbean holding stream from roughly at what it was in the prior comparable period, around 210 million. Guyana up 20% from 277 to about 331 million. Ghana up impressive 43% from 101 to 145 million. Cayman Islands dipping just a bit, just about 11% from 365 to 325 million in that darkish green segment, and the British Virgin Island segment improving from 65 to 70 odd million. So overall, again, before eliminations, there was some notable changes overall in terms of profit before tax, roughly a 5% increase from 2.16 to 2.27 billion. Now, from a valuation perspective, Republic continues at its current share price to offer some quite attractive valuations for a long-term investor, trading at a price earnings multiple of 8.9 times, which is just below the banking sector average of 9.3 times, and with a very juicy dividend yield, if you want to put it that way, of around 5.2%, which is at the higher end of the banking sector dividend yields. And in fact, across most of the market, it's one of the more attractive and perhaps reliable dividend yields dividends that investors might have come to expect. So again, trading at that price of $110.57. And with those valuations in mind, we just went through them, the price earnings ratio and that dividend yield, which is above the sector average of 4.8%, and keeping that higher and persistent revenue growth in mind, modest earnings growth, that continued geographical diversification, as well as those relatively attractive dividends, Bourse is maintaining its overweight rating with a stable outlook on Republic for the time being. Turning very quickly to First Citizens, or FCGFH, well, the group would have reported an earnings per share figure of $2.85 again for their 9-month period ended June 2025, a 5.2% increase from that $2.71 recorded in the prior comparable period. Now, attributable or driving this performance was that net interest income increase of 2.1% from $1.5 to 1.55 billion. Overall net revenues increased a more modest 3.5% relative to Republic of 2.04 billion, from 2.04 billion rather to 2.11 billion. Overall, however, operating profits increased 8.5% from 910 to 987 million, with profit after taxes increasing that 5.1% from 684 million to just under 720 million. Now, when we take a look at PBT contributions by segment, again, before eliminations, we can see it was pretty much consistent. There was a roughly 9% or 12% rather decline, or 9% decline rather, from 43 to 39 million in terms of PBT contribution from the trustee and asset management segment, a roughly 11% decline from 475 to 419 million in treasury and investment banking contributions to PBT. This was offset partially by that improvement in retail and corporate banking, which would have improved from 769 to 805 million, a roughly 4.7% increase there over the comparable periods. Now, when we take a look at FCG's, or First Citizens rather, asset composition, we can see some quite notable changes over the last 9-month period of 2024 to its current period, 9-month 2025. There was a roughly 11% increase in total loans to customers from 21.2 to 23.6 billion, with an almost 30% increase in its investment holdings, increasing from 12.8 billion to 16.5 billion. This was funded, of course, by some deterioration in its cash position, a decrease in its cash position, so optimizing its balance sheet overall, with an ultimately roughly 10% increase in total assets over those comparable periods. So FC, or First Citizens rather, is improving in terms of its balance sheet optimization, which is, of course, contributing to a large degree to its improved profitability over those comparable fiscal periods. And from a valuation perspective, again, FC, or First Citizens rather, is trading at a price earnings ratio of 10.6 times, which is slightly above the sector average of 9.3 times, as we mentioned, but it does offer undisputedly the highest dividend yield right now of just under 6% when compared to the rest of the banking sector, and indeed the banking sector average of 4.8%. So with that modest revenue growth in mind, those improving earnings, and of course that attractive dividend yield, any way you look at it, again, relative to the banking sector or overall relative to the stock market in total, Bourse is going to maintain its overweight rating on First Citizens for the time being with a stable outlook. Well, that's it for this week's edition. For more information, you can give us a call at 2-BORSE or 226-8773. Email us at info@borsefinancial.com. And of course, you can check out our website where all of our research is absolutely free at borseinvestment.com. And you can catch this article in today's business section of the Trinidad and Tobago Guardian newspaper. So until next time, stay safe, happy investing, and we'll see you again on the Bourse Report.